Today, we're going to break down one of the most practical tools for beginner investors, the ETF. ETF stands for Exchange Traded Fund. At its core, an ETF is a collection of investments, most often stocks, that are bundled together and traded as one unit. Instead of buying shares in just one company, an ETF allows you to own small pieces of many companies at the same time. That single purchase can represent dozens, hundreds, or even thousands of businesses. This structure is intentional. ETFs were designed to make investing simpler and more balanced, especially for people who are just getting started. One of the biggest benefits of ETFs is diversification. Diversification means your money is spread across multiple companies rather than concentrated in one place. So if one company underperforms, it doesn't necessarily derail your entire investment. This does not eliminate risk, but it does help manage it. Another key feature of ETFs is how they trade. ETFs are bought and sold on the stock exchange, just like individual stocks. That means you can see prices throughout the day, buy or sell during market hours, and get started without large amounts of money. From an investor's point of view, ETFs combine the flexibility of stocks with the built-in diversification of a fund. For example, some ETFs track major market indexes like the S&P 500. Instead of trying to choose one company from that index, you can invest in an ETF that represents the entire group. This allows you to participate in overall market growth without needing to predict which individual company will perform best. That's why ETFs are often used as long-term core holdings in investment portfolios. ETFs are not about avoiding research. They are about simplifying decision-making. Rather than managing many individual stocks, an ETF allows you to focus on your time horizon, risk tolerance, and long-term goals. One important reminder: ETFs reduce single company risk, but they do not remove market risk. If the market declines, most ETFs will decline as well. However, because they are diversified, they are generally less volatile than owning only one or two stocks. So here's the definition to remember. An ETF is a ready-made group of investments that trades like a stock, allowing investors to gain broad exposure with a single purchase. For many people, ETFs are a practical starting point and often a long-term foundation for building consistent ownership in the market.
We don't work for money.